Hello trader, I'm Shane, a professional Elliott Wave analyst preparing to complete CEWA-Master designation at Elliott Wave International. I'm just making some final small preparations before receiving my official certification. You can support Shane in maintaining the channel to share valuable knowledge by registering a trading account at XTB via the instruction form in the description below the video. Thank you and let's go. Hi, welcome back to Elliott Wave Classroom today. In today's lesson, I will guide you about crude oil, and there are some knowledge you need to grasp when you conducting real-time market analysis in today's broadcast. Yes, so this was my prediction, and it didn't happen, but it happened in a different direction, which is understandable because on the market there are always 2 to 3 different recounts, and you must evaluate the risk and evaluate what is the best recount with the highest probability and bet your money on that recount. And yes, when you lose money, that's when you know you were wrong and where you were wrong and how you were wrong. And only the Elliott Wave Principle can help you rigorously and define those aspects accurately. And so, excuse me, and today's I will guide you through another perspective that I don't often update with the alternate wave counting. It means alternate wave counting scenario, because I only focus on counting the best probabilistic ways tallest, and because I don't expose readers to too much information, and I only provide the best wave count available on the time. And in today's broadcast, focus on the knowledge you will receive along with my latest forecast for the crude oil. And first, I have the price action following the high on the risk price chart at 94.99. This is a bear market drop to the low of the 67.68 and subdivided into 5. And furthermore, with the wave 3 purple, I can clearly see them subdivided into 5 again. And yes, you can see they are labeled with the waves 1 to 5 blue. In going even further, I could see the wave 3 blue subdivided into 5 again. And I can say the price action is very clear and good. And okay, so you can see my previous broadcasts which cover the question where I can start counting waves. I found an impulse wave and I started building a wave count based on the price action that was already there. And so, moving forward, price action from the low of the 67.68, I seeing a 5 ways up. I proceeded to label this entire bull market as wave A purple. They have a not so obvious subdivision. However, this was the best wave count I could make. The wave 1 blue of the wave A purple has been subdivided into 5 at a smaller degree. Next, the wave 4 blue is a triangle. Well, a mistake that I see a lot of analysts making in the name of using Elliott Waves. Perhaps they don't understand the orthodox Elliott Wave Principle from Robert Cracker, the person who brought the Elliott Wave Principle to the world today. That is, they believe that this wave count may have been wrong in the terms of rules. And yes, the rule that the wave 4 cannot move to the price territory of the wave 1. So, rest assured, I'm Shane with the CEWA-Master candidate. I understand the Elliott Wave Principle better than anyone out there. A professional analyst preparing to be certified, and will definitely not let himself make mistakes and mistaking or have wrong understandings. Rest assured, I am qualified to clarify this aspect of knowledge for you and they have a rule about impulse wave clearly stated. Wave 4 never ends within the price territory of the wave 1. Yes, I'm talking about the termination point of the wave 4, not subdivision of wave 4. So check the chart again. The termination point of the wave 4 with triangle pattern is in wave E, and it didn't end in the price territory of the wave 1. Yes, I have seen many Elliott Wave analysts not understand this, so luckily you do understand it. And I also used to calculate a lot of and I also used to calculate a lot of at the senior analysts at the Elliott Wave International who is also did this. Very simply because the senior analysts and I learned from the same the formal source of the knowledge, and we with also to be the CEWA certification. And yeah, so moving to the next chart, since the high of the 76.10, so let's see, and I observe a bear market subdivided into 3, and this makes it even more clear that my wave counting is correct, because a motive wave 5 is always followed by corrective wave 3. So, and next, moving forward to the next price action from the low of the labeled A blue, instead of increasing in the price with a motive wave 5, the crude oil increased in the price with a corrective wave 3, which shows that something is wrong. And in contrast to my 5 ways up expectations, and take a look at the chart on your screen, and yeah, and all I have from the market, yeah, you can see all I have on the market is a 3-3, which suggests I go to a flat correction in the larger growing degree with 3-3-5, or maybe triangle in the larger growing degree 3-3-3-3-3. It means A, B, C, D, E. And well, no matter what, entering a trade in this case is too risky, and because there are 2 possibilities. The best work is to wait until you have enough information about price action. And so, a few days later, crude oil had this next development on the market, and there were many 3. This is a completely different flat correction. Different from a flat correction of the 3-3-5, where the correct pattern in this situation is a triangle with a 3-3-3-3. It means A, B, C, D, E. You can see on your screen. And so, well, now you have predicted the appearance of the triangle, and it seems that this triangle has prepared or has ended. At least I have counted 5 ways, including A, B, C, D, E, blue. And you can take a position of the options contract or the futures contract when the price above the high labeled D at the 74.59, because trading at this time is extremely risky, and the stop level you can place at the low labeled C is a sharp stop level. And coming to the latest price action, the bull market has been bullish following a triangle correction since the low of the 72.53. Crude oil has been continuously moving higher over past trading days. And yes, here is the latest forecast. A bottom line, crude oil will move higher with the wave C. The big context shows wave being circled, green is under wave, and the short-term outlook shows wave C in the zigzag correction continuing to move higher. Possible target at the 81.0. Then the wave C equals with the wave A. And while the price should remain higher than 76.03, a drop lower shows that the wave 3 has peaked, and the waveform is underwave. Before the wave file will pushing high, the price action higher afterward. And yes, so this is the end of the Elliott Wave classroom today. I always try to share the most valuable things with you, and I hope you will enjoy it. Once again, I'm Shane with CEWA-Master candidate. Please leave any comments, any questions below. I will answer it as soon as possible. And okay, so have a great time, my friend. Goodbye and see you soon.